Breaking economic news, existing home sales came off of their recent highs in August, falling 4.8% to a 5.31 million annual rate of turnover. 620,000 condos, co-ops, and 4.69 million single-family homes. Another day, another economic indicator showing the economy is normal. Don't be fooled by the 4.8% decline today. 5.31 million is a normal level of sales activity. Actually, it is difficult to define normal sales activity from this important economic statistic from the National Association of Realtors. It was 5 to 5.5 million in the late 90s when real GDP ran fast at 5% and there was a stock market bubble and people had money to burn. We assume that is normal based on the economy and not looking at things like demographics and household formation. Existing home sales were as high as 7 million in 2005, the last full year of the housing bubble, before higher mortgage rates let the air out of the bubble that the Fed created. We don't expect home sales to get that high again. Fed Chair Yellen is concerned about housing. She thinks housing remains very depressed. She was asked about this in her press conference last week. We guess she means housing starts, new construction, as existing home sales turnover looks normal to us. She also said housing was not a key driver of the economy going forward. Well, I don't know about that. Despite the depressed characterization of housing, she said the Fed expects a pretty gradual path of increases in short-term rates, and it will be natural for long rates to rise some as time goes on. That's what she said. Can't wait for that. 10-year Treasury yields are stuck at 2.2%, waiting on the Fed. Net-net, existing home sales came off the recent highs in August, falling 4.8% to 5.31 million. Before the recession, during the housing bubble, sales activity was above 7 million briefly. If Fed Chair Yellen is waiting for 7 million again, that was an overshoot. And Fed policy should not be geared to letting that happen again. It was interesting, the National Association of Realtors said sales could actually be 6 million annually if mortgage credit conditions were not so tight. 5.31 million is in the normal zone based on our analysis. Most of the drop was centered in the South, the biggest market, down 6.6% to 2.14 million, and in the West, down 7.8% to 1.19 million. The West is seeing the strongest price gains, where homes are up 7.1% in August from prior year levels. Realtors are increasingly of the opinion that home price appreciation is looking a little on the unhealthy side. Maybe the Fed's zero rates policy is causing a new housing bubble. Anyway, another day, another economic report showing the economy is no longer in the grip of financial crisis and recession. The economy is stronger than you think.